So Pankaj, should we start? Rajesh bhai?
Yes, yes.
So very good evening all the members, and you are again welcome on this third day of this 4-day webinar series on bank branch audit. We have already seen 2 days, a rockstar performance by all the two faculties, and again we have got a seasoned faculty on bank branch audit who is going to take us through the intricacies of IRAC norms. Again, whenever we are in the particular assignment of this bank audit, bank branch audit, we know that IRAC norms we have to follow and properly adhere to, and we have to check whether all the classification made by the branch particularly or the bank through the system is following these IRAC norms or not. And for that, we have to have a basic and particularly in this particular phase because different types of loans are there and different types of norms have to be followed. And that is how we have to be updated with the norms, updated with the changes, if any. And also, we have to have the case studies also. And for that, we have our well-known faculty, Pankaj Tiwari ji. He was with us in the bank branch audit seminar, physical seminar also, and he was also very happy to see the participation and enthusiasm of the participants on the second day also. And with this, I'll request Rajesh Agrawal ji, who is our chairman of Vikasa this year, to like introduce the speaker and to have a word about this webinar series as well.
Thank you, Piyush bhai. Today's speaker, I welcome today's speaker, Pankaj Tiwari ji, who is a partner in SNK and Associates LLP with experience in audit and assurance services across banks, NBFCs, HFCs, and listed entities. Wide experience in banking sector. He has extensive experience in handling audits under Ind AS, IFRS, US GAAP, and IGAP, and has previously worked with BSR and Company LLP in the financial services sector. He is actively associated with active ICI and BCA's committees, contributing to bank audit guidance and financial reporting publications. A regular speaker, he delivers session on India's Companies Act and banking audits at various professional forums in India and abroad. Very fortunate to have you, sir, for this today's session, and our members will really enjoy your session on bank audit. Thanks to our chairman, dynamic chairman WIRC, and the committee chairman Piyush Chandak for organizing this series for the benefit of members. Thank you.
Thank you, Rajesh bhai, for your kind words and for the introduction of the speaker. Before the speaker takes over, I'll just now like to announce again that along with having so many initiatives on bank branch audit, particularly because this is the start of the season for all of us, we have taken up the publication of the book on bank branch audit. You can have the copy from WIRC. And we also had done this seminar on 2 day seminar at WIRC as well. Rajesh bhai is showing the book Bank Branch Audit. This is a good publication contributed by many good writers. And along with that, we are also going to have some Sankat Mochan during the time of our bank branch audit assignment. And we are having a help desk, live help desk on a daily basis, which is will be on 6 to 7 p.m. from 4th April to 10th April. And I would like to mention that CA Pankaj Tiwari ji has also agreed to guide our members whenever he is available on those dates. He will be there. You can post your queries in the Google form floated by WIRC, and you can also join in this live help desk to have the solutions live from the Central Statutory Auditor and from the experts of the subject. And I'll be thankful again to CA Saurabh Ajmera, who is Chairman WIRC, and entire team WIRC, including Vice Chairman Rikin Patel, Secretary Pishan Shah, and Treasurer Rakesh Bhai Shah. He was also supposed to join, but again, he has got some emergency meeting, and that is why he was not able to join today. And with this, I'll request Pankaj Bhai to please take charge of the session and take us through the provisions of IRAC norms. Thank you, Pankaj Bhai. Thank you. Over to you.
Thank you, Piyush. Thank you, Rajesh bhai, and thanks to WIRC for inviting me to speak on a very crucial and a very timely topic on the IRAC norm. As already both the people have set the context of the discussion that whenever we go to audit any particular branch, the IRAC norm becomes a very critical part for us to look at it. And it is very important that we are updated with the recent changes or the recent norms which are issued by the RBI to keep us updated, so that whenever we are going to the branch, we are asking a right question to the right person and we are getting right query from their side. So I have a small presentation which I will try to put it on a slide, and somebody can just confirm me whether it is visible or no. Uh, Piyush, can you see the slide which is there?
Yeah.
Yes,
Yes.
yes, sir. Slides are coming. Yes.
So, friends, what I've done, in addition to the IRAC now, which obviously I'm going to deal with it, what are the issues which are there? I thought it is also important for us to understand that what are the recent regulatory developments to have an overall view on the bank branch audit. I mean, IRAC norm is one piece, but due to the recent frauds or recent instances or in the some of the private banks, it is also important for us to focus upon or pay a little higher attention on the other subjects as well. So the whole presentation is divided into two topics. One will be on the recent regulatory developments which will be there, and the second one will be on the IRAC norm, which I'll be dealing with in this 1 hour 44-minute session. And whenever you guys have any question, please try to post them on the chat box, and we'll try to take the question at the end of the session, and if they are not addressed during the session. And let me tell you, my friend, at the beginning itself, in the IRAC norm, there are no changes per se. The IRAC norm, which was there in the last time, is continued to remain current year also. There are no changes. However, based on my practical experience since I deal with the banks on a daily basis, I have tried to highlight some of the issues which one should be aware about, and one should look at it because there are diverse practices. The bank may be taking a different interpretation as compared to the IRAC norm. So those points will be critical for us to look at it basically. So let me just start my presentation on the recent regulatory development at the beginning. So, this is the cartoon, or this is the point which has been made up by the RBI, which I love the most. That, the RBI in the recent time has been saying that, that RBI कहता है जानकार बनिए and सतर्क रहिए. Obviously, they say all these things for the customer, but as a auditor also, this is a very important thing for us, that we should be aware, that we should be through these programs which are organized by the WIRC or the Institute of Chartered Accountant of India, we can gain the knowledge, and when we go to the branch, we should be alert about the branches as well, what is happening at the particular branch. Now, just to give you broad context on the major developments which are happening, my friend, on the banking industry, some of you would be already aware that you had certain frauds which were reported in multiple private sector bank. One was the IDFC First Bank, where a fraud on deposits was reported. Then we had a Kotak Mahindra Bank fraud which was reported, where some amounts were transferred from some of the deposits account to various other customers accounts, and the funds were diverted by the employee in collusion with the customer, etc. And all these thing raises a important issue for all of us, that are we just focusing upon the branch audit only from a perspective of the verification of the advances and verification of the NPA, or do also we need to focus upon the verification of deposit as well? Now, considering these recent fraud, and as of now, before coming to this session, I was on a discussion with one of the banker where we were discussing that how do we address this issue and what are the precaution we need to take care whenever we are looking at these deposits, etc. In my mind, friend, whenever you're going to do the audit in the current year, I think one of the important point and one of the critical point one should look at it, that you have to do three steps when you're going to do the audit in the current year. With respect to the deposit, again, I'm still discussing the importance of the deposit and the audit procedure around it. Now, whenever you're going to the branch, you have to first do an inquiry with the branch. Like, for example, you visit a branch. In the first meeting with the branch manager itself, you inquire with the branch manager that do you have any government deposit, or do you have any high value deposit which is with parked at a particular branch. Now, whenever you get to know that yes, there are certain deposits, there are certain corporate deposits which are maintained, which are high value deposits. Now, there could be an issue of chances of a fraud which could happen. Now, the second aspect you need to look at it, that review those deposits accounts. So, like for example, let's say you have identified that there are 10 deposits accounts which are high value deposit account belonging to some municipal corporation or some state government authority or some central government schemes, etc. Now, what you need to do, you need to look at these deposits, you need to do an inquiry, which we discussed first. Then you review those deposit account, whether there are any frequent withdrawals in those deposits account, whether there are significant, transaction in those particular deposits account. Now, you have to arrive at the genuineness of those transactions with the vouchers and with the documents which would have been presented to the banker for approving those disbursements or approving those withdrawals. And the third and important aspect which one should look at it is the confirmation process. Whether the branch or the bank has any confirmation process which they run, confirmation or reconciliation with the government authorities or the corporates. Now, whether they have any process of confirming the balance at a regular interval with those particular, corporate companies and with those particular, central government or state government. Uh, Either the departments or under the respective state heads basically. So these are the three processes which one need to do whenever you're going to do that audit of deposit in the current year, in addition to whatever you would have learned in the past. Now, if you look at it, what is the nature of the fraud, and the people who have read about this fraud as part of their newspaper articles, etc., the major issue was what? The major issue was that the amount which was deposited by the government, authorities was supposed to be utilized for a particular scheme. Like, for example, let's take an example of a Jal Jeevan Mission. Now, if an amount has been deposited, a grant has come from a central government, the money has been deposited in a particular account, the money can be withdrawn only once, twice, or thrice, or four times in a particular year, because every day you will not have a withdrawal from these schemes which are there. Now, in both these instances, what has happened to the extent of the information which is available in public domain, that on these withdrawal, there were frequent withdrawal in these deposits accounts. Like, for example, it was running like a current account, even though it was like a deposit account which is fixed for a specific purpose. I think there were no alerts which were generated, or even if the alerts were generated on this withdrawal of the money, they were completely closed by the same individual who was involved in the fraud. So that is why, audit of deposit becomes very critical for us in the current year. And I will request all of you, whenever you are visiting the branches now, you would have got the allotment and you would be visiting the branches. I think this should be one of the primary questions which one should ask in the current year, that do you have any high value deposit? If you have any high value deposit at a branch, please do inquiry, please do review of account, and please understand the confirmation process. Because friends, you can't send the confirmation and you can't get the confirmation within 10 days or 15 days, or I would say a week, what you spend at the branches. So we need to rely upon the confirmation which is obtained by the respective banks or respective, the branch managers, etc., as part of the reconciliation process. The other point which I thought I will pick up with you, my friend, which is important in the current year regime. If you look at the current year, the repo rate has come down three times in a year. It is in April, it is in December, it was in June, I believe so, where the repo rate was cut and the repo rate benefit would be passed on to the, individual who have borrowed a loan, where the rate of interest is linked to the repo rate or external benchmark rate. Now, some of you would have read the article where Bank of Baroda had identified an issue with respect to their EMI schedulement, and which has impacted delinquency on the part of the borrower. I think this is a second theme which I would request all of you to look at it, that currently whenever a repo rate has been reduced in these three instances in the current year, how the benefit has been passed on to the customer, whether the benefit has been passed on to the customer, and whether his repayment schedule are intact, or there are any issues or discrepancies which are identified in the repayment schedule. I think this is one of the critical issue which one should look at it, my friend, that whenever you're looking at the change, repo rate cut, which is the benefit is getting passed on to the customer, actually it should benefit the customer and not work in a reverse way. So I think this is the second point which I would request each one of you to look at it as part of your audit. One, I spoke about, just to recap, one I spoke about on the deposit side, that this should be one of the focus area in the current year, my friend. The second, I would request you to look at it, that how the EMI or the repo rate cut has been passed on to the customer. You don't need to do entire population check. You just can do a sample check to verify some few sample whether the EMI has, I mean, the interest component in the EMI has gone down, with respect to the reduction in the rates. Now, the second one, which is obviously, is a gold loan piece, which I will talk about going ahead in the presentation. So from this slide, the two takeaways which I can tell you, my friend, is one is on the deposit front. One need to be very careful in the current year. And second is on the whole repo rate cut, how it has been affected in the system and how the benefit has been passed to the customer. I think, if you look at it, the current challenges, my friend, which are there in the bank branch audit for at least the current year, is mainly, if you look at all the banks which are there, they are increasing their retail book, agri book, and MSME book, which typically is called as a RAM portfolio in the banking, domain or in banking terminology. The RAM portfolio, this has been a area where a lot of banks have been focusing upon in the current year to push the disbursement, because there are hardly any corporate lending which is happening, hardly any private capex is happening. So all the banks, whether it is private bank or public sector bank, are completely focusing upon these retail loan portfolio. And whenever these retail loans are there, the end use becomes somehow, somewhere, a question mark kind of a thing. Because let's say you are disbursing a personal loan, you're disbursing a loan against property, so on and so forth. So whether this money has been clearly utilized for the purpose for which it was intended becomes a question mark. And this could also lead a potential evergreening aspect as well. So whenever you're looking at any particular branch, you look at it whether there is a retail dominated branch or a corporate dominated branch. And if it is a retail dominated branch, you need to look at it, what is the disbursement which have been made during the particular year, and its correlation with the level of NPA what it has. I'm not sure all the banks are doing this kind of an exercise, but it is best to be aware about it and best to evaluate it at our aspect. I think the second point may not be relevant from the branch audit perspective, but it is very relevant from a central stat audit and a banking industry perspective. Now, if you look at it, it has been a very headline kind of a thing which has been highlighted, that the NPA level of the banks have been coming down in the current year. And these NPA levels have been coming down, where RBI has highlighted that these NPA levels are coming down because you have a very aggressive write-off policy per se by the banks. So once an account becomes an NPA, at a very, very frequently the accounts is written off from the books of account also, and that is why your NPA levels are very low. Now, what I would suggest you, that taking the clue from here, let's say if you're going and visiting a particular branch and there are cases which have settled during the particular year, or there are settlement which have been entered between the branch and the customer during the particular year, I think you should pick up those files and try to look at it whether there is indication of any credit risk or a fraud risk. Like for example, when the loan was sanctioned, whether there were any apparent deficiencies which were there, which could have prohibited the bank from disbursing this particular loan. However, the bank went on disbursing this loan, and the loan has become a kind of a delinquent or an NPA, and now we are reaching to the settlement. So I think the clue which we have to take is that you have to pick up some samples from the loans which have been written off or settled by the branches in the current year, and look at it and identify whether there is any credit or fraud risk aspect is there. And I think the other point which I would try to, highlight, one thing, my friend, which is very, very critical and very important, which we are discussing across all the banks, is that, today the banks are not facing a issue with respect to the credit risk. They are not bothered about the NPA level. They are not bothered about the rate of interest which is they're charging to the customer, or, they're paying it on the deposit, etc. The one thing which the banks are very worried and banks are extremely cautious is the increase in the employee fraud during the current year, or during, I would say, past 2 to 3 years. And these are substantiated by lot of frauds which we can see in the current year. Let's say a gold loan fraud which get reported, or unauthorized transaction in the deposit account which get reported. Now my request to all of you will be, in the current year, in addition to the deposit which we discussed, in addition to the the whole EMI piece which discussed, the third and important point which I would like to request all of you to review it as part of your current year audit, in addition to whatever normally you are doing, is also look at it, the job rotation policy of the bank, and whether there is job rotation policy or a mandatory leave policy has been effectively implemented by the banks or the branches. Because these are the issues which gets escalated to the level where an employee would engage into a fraud activity, or an employee will get into engage of the misuse of the power which have been given it to him. So my request to all of you will be that if you are finding that the job rotation policy has not been effectively implemented, ideally, the job rotation policy is that each employee should rotate out from a particular location, or from a particular branch, at least at an interval of 3 years. Now, if you know that 78% or 70 or 80% of your employee are the same, which are there for remain, more than 3 years, etc., this becomes an issue, and this becomes a kind of what you say, a familiarity issue, or a kind of an opportunity to the employees where they could collude with the among themselves or with the customer to defraud the bank or to misuse the power which had been given to them. So I think this is one of the critical aspect which could become a reportable matter in the LFAR, that do you have a job rotation policy, and if the job rotation policy is there, has it been effectively implemented in the branches which you are auditing. So in addition to verifying the deposit piece which I told you, in addition to verifying the EMI piece, which I told you, I think this is one of the aspect which one should look at it and try to comment in the LFAR report in other section of the LFAR, because this will be a value addition to to the central stat auditor and even to the banks also if it has not been implemented. Like for example, let's say my friend, today we audit at least 24,000 branches across all 12 public sector bank, which are audited by the branch auditor like you and me. Now, if the 24,000 branch auditor are reporting that the job rotation policy has not been effectively implemented, or there are potential chances of a collusion between the 2 to 3 employees of the bank or employee of the bank and the customer, this would raise a red flag to the RBI, and this could become a potential matter with the RBI will pick up with the banks, that why are they not effectively implementing the job rotation policy. I mean, I'm not saying that the job rotation policy is the only solution, but I think this is a better control as compared to putting a lot of other control in place. So I think, my friend, till now we have discussed 3 points, which I will try to repeat it again. Your deposit should be a part of your verification of deposit should be a top priority for you when you're visiting the branch in the current year. Must to do will be the sample verification on the whole EMI piece reschedulement. And the third and the important point, which we highlighted from a qualitative perspective, is this on a job rotation. You should comment on the job rotation if it is not happening at the branches, and you should take a what you say, a list from the branch manager, that which employee has joined the bank since, I mean the branch since when, and when his the next rotation is due. I think this will be a good input to the central stat auditor and even to the RBI as part of your report. Now, coming to some of the regulatory developments, my friend, before, first I've just discussed on thematic issues which should be picked up in the current year. Now I'm coming to some of the regulatory issues which could be a, part of your verification exercise in the current year. And then I will come on the IRAC norm. So this is the second part of my presentation, my friend. Now, there are multiple circular, and there are, hundred and thousands of the circular which are issued by the RBI, and the RBI has been a very active regulator in the recent time, where they have consolidated all the circular into some kind of a, master circular kind of a thing. Now, if you look at in the current year, my friend, there are some critical circular which one should be aware about it. I will just try to highlight them. You can go through them in detail at your own convenience. One, and because they have some or the other implication on the classification of an account as an NPA. And now one of the important circular which has been issued on 14th February, November 2025, which was mainly on the US impact on the because of the US tariff impact, basically. So this circular gives you an indication or gives you a direction that there are certain sectors which were identified as an impacted sector, where some kind of a, what you say, a relief was given or a moratorium was given on repayment of principal and installment on the loans. And this circular says that if your account was standard, let's say on 1st September 2025, the account will remain standard till 31st December 2025, even if you don't make any repayments on the particular loan. And this also circular goes on to say that those period will not be counted as a DPD period. That means it will be completely a DPD holiday period. So in the current year, you might see some of the customer having overdue or have not serviced the interest, let's say for more than 90 days kind of a thing, which
Hello, Pankaj sir. Hello.
Yes, sir. मिश्रा जी,
सर उनका नेटवर्क डाउन हुआ शायद से।
मिश्रा जी,
सर नेटवर्क डाउन हुआ शायद से।
हाँ उनका डाउन हो गया। ओके, एक बार सर को फोन कर लीजिए ज्वाइन करने के लिए। Sir, wait a minute. Speaker is joining.
कर रहे सर।
Yes, sir. Some technical issue is there. He is joining again. Sir, for PPT, na, you visit WIRC website.
सर ज्वाइन कर रहे हैं।
At WIRC website, you will find PPTs of all the sessions.
I have talked to Pankaj, he is joining.
Yes.
He is back. He is back.
Sorry, I'm in a place where there's a little bit network issue. 1 minute. I'll just again try to put the screen. Yeah. I'll just switch off my camera for that moment. I think that will be better. Yeah. Yeah. I'm audible, Piyush?
Yes, you are audible. Yes.
Okay. Sorry for this trouble, friends, because of this technical issue. Okay, I think I was on the trade relief circular, which I was speaking about that there are, industries which have been identified in the current year where there are some trade relief measures are given. And I was saying that there are, there is what you say, a DPD holiday period which have been given to these kind of cases and where no DPD will be counted. So you can go through the circular in detail because this could have an impact on your NPA piece, and this could also become a reportable what you say, a matter in the LFR if it has not been implemented correctly. Now, there is second circular which are applicable to the project finance loans which are there in the current year. And this circular is effective from 1st October 2020-25. There are many loans which are there in the current year or maybe there at your branches which could be called as a project finance loan, mainly just to identify simply which loans would be called as a project finance loan. You can look at it if there are any loan which has a linked DCCO and the repayment schedules are linked to the achieving those DCCO, those could be called as a project finance loan. I mean, I'm very giving you a very crude kind of a definition. And there are implication on classification of these accounts as an NPA because some relaxation has been given to those cases where NPA could be, even if you are deferring the DCCO, the NPA classification may remain static. Another important point which I thought I will share with you all, my friend, is with respect to the whole gold loan piece. Now, currently, the RBI has issued a circular on the gold loan, which is issued in 2025 June, and which is effective from 1st April. Ideally speaking, no bank has implemented it by 31st March because the date was 1st April. So whenever you're going to the branch in the current year, I think one of the important point which you should ask the branch manager is that which circular your bank has implemented it, and whether the updated circular has been implemented it, because the circular had said by 1st April. So earlier implementation of the circular was also allowed. However, to my understanding, no bank except one or two public sector bank has implemented this circular, and this circular has a various implication on let's say on the LTV norm, on the credit assessment, etc. And this circular, I mean, whether we agree or we don't agree, this circular allows the rollover of the loan by repayment of an interest. So it's an important piece to look at it in the current year, the whole gold loan circular piece. And there are other, circular which are related to the prepayment of charges, etc., which will be applicable to the, which are effective from 1st January 2026. And I think as a auditor, we should look at it. The circular very clearly says that you can't levy foreclosure charges on the individual and a business loan if they are at a floating rate. Now, many private banks have this kind of a practice of not charging the foreclosure or what you say, foreclosure charges on the individual cases or a business loan cases if you're an MSME client. And that is what the circular is also trying to see. So this could be become one of our important parameter to verify in the current year. And if there are any lapses which are there, or if there are charges which has been recovered from the customer, this could become an important issue and a by way of an MOC. So this is a a potential area of an MOC if the bank has charged the foreclosure charges on those particular loans, and if the what you say, if the and if the bank is continue to charge those foreclosure charges to the loans, then it could become a reportable matter also in the LFAR. Now you have a co-lending arrangement circular also in place, my friend, but I think that may not be relevant for all of you because the co-lending piece is normally dealt at the head office level. So just to recap and just to tell you all till now what we have discussed and what we should be aware about, uh, so that we can move now to the next segment of the session, which is mainly on the IRAC norm. One thing which we discussed at the beginning is on the deposit piece and on the employee, on the deposit piece we discussed, and we discussed on the whole EMI schedule piece. The third piece we discussed is also on the job rotation policy, which I think is a very important. So in addition to whatever you would have done at the branches, these are the three important points which you can pick up at the branches. Then the second segment, which we just discussed, is on the key and important circular of issued by the RBI, whether it is related to the trade relief, whether it is related to the gold loan, and whether it is related to the prepayment of charges, so on and so forth. So I think this is a very important piece which one should look at it. And my friend, if you put all 6 points together, and if you identify even if 2 to 3 issues in the branches which you are auditing, I think it will do justice with the time what you spend. And I always tell people that what is the expectation of the regulator, which is RBI, or what is the expectation of the banker from you, or the, let's say, the MD, the CFO of the banks from you. The expectation is very simple, that you tell them there are 3 issues, primarily 3 points. One, you tell them whether there is any regulatory issue. What do you mean by regulatory issue? Look at all this circular and comment whether they have complied or not complied. Because before the RBI comes and point out to them, it is better if as an auditor we point out to them. So whether the new regulatory guidelines which are applicable to the bank have been complied by the branches or complied by the bank or no, it is what they're expecting from you to comment upon, basically. The second expectation what these bankers have from you, that you identify if there are any system issues which are there, where whether their core banking system or their other systems are not functioning as they were intended to function. Like, for example, the issue on EMI, what we just discussed, that whether the EMI post the rate cut scenario has been computed correctly or have been passed on to the customer correctly. So that's a system issue. If there are any challenges which you have identified, or their discrepancy which you have identified, please report upon it. The third and important issue is process gaps. So whenever you are looking at the deposit piece, whenever you are looking at the employee rotation piece, you comment upon that, whether the process have been followed correctly by the branches, or whether the process have been followed correctly by the banks. Now this becomes an important and a reportable matter in the LFAR, But three issues which clearly the banks are expecting from you: regulatory gaps, system gaps, and the process gaps. If these three gaps we can address, I think we will do a better justice with the banks as compared to what we would have been doing in the past. Now, coming to let's say on the IRAC norm and the important circular, which I would just try to tell you, my friend, that currently in the current year there are some changes in the IRAC norm, uh, not in terms of the asset classification or the provisioning aspect. What the RBI has done, the RBI has bifurcated the whole circular of IRAC into two pieces. One circular, which is put it on my slide in the bracket, is mainly on the IRAC norm, which is dated 28 November 2025. It is updated up to 1st January. This is a consolidated circular which talks about identification of account as an NPA, provisioning aspect of an NPA, and the classification aspect of the NPA. The second point, which was related to the whole restructuring piece, has been put up in a different circular, which is on resolution of a stress asset. So, whenever you are looking at what you say, any issue or any guidance on the restructuring piece, you have to go on the second circular on my slide. Whenever you are discussing any issue with respect to the asset classification, provisioning, etc., related to the NPA, you have to go to the first circular. Otherwise, it will become very confusing for all of you in the current year, at least, to see which circular pertains to what areas, etc. So I thought I will just share it with you so that it becomes simple for all of you. Now, I think the gold loan piece has been already, we have discussed. And another important point which I would like to, highlight to you all, and which I thought would be a one of the critical point in addition to what we have discussed, is look at the penalty orders which have come on the banks in the last 1 year. Because I always say, it is good to learn from a mistake of ours, but it is better to learn from mistake of others. What mistake others have done, which we can learn from them. So that is why these penalty orders or those penalty which are levied on multiple banks, private bank, public sector bank, can serve as a what you say, a ready-made tool kind of a thing for us to go and ask the question, and whether any deficiencies are there or not there. Like, for example, the first penalty, which is very simple and very easy to identify at the branches which you're auditing. Let me tell you, all these are non-compliance of the regulatory guidelines. There is no interpretation involved. There is no, what you say, a subjective parameter or a judgment involved. Now, if you find any one of these issues, my friend, it will be easily become a reportable matter in the LFAR, and could also become a matter to be reported in the main report. Now, if you look at the first point, which I am trying to tell all the branch auditor, at least to verify in the current year, is very simple, that whenever you visit a branches, you would have a locker facility given to the customer. Now, as per RBI and as per the bank's policy, normally the rent of the lockers are collected in advance by the by the customers, etc., from by the bank from the customer. Now, let's say my locker, I have gone and taken a locker at XYZ bank. I paid 12,000 rupees, considering a 12 months tenure, to the the bank. However, after 6 months, I don't want that locker and I want to surrender the locker. Now, the additional 6,000 rupees which I have paid to the bank need to be refunded back to the customer, back to me, as per the RBI guidelines. However, there are many banks and there are big names involved in some of these instances, which are or were not refunding the proportionate locker rent to the customer. Now, you might find a very trivial issue to highlight in your report, or trivial issue to highlight or even discuss with the branch manager, but my friend, this is a non-compliance with the regulatory guideline, and there are multiple banks which have been levied penalty by the RBI for not refunding these amounts to the customer, or not complying with the guideline. So, as an auditor, it becomes important for me that at least for the cases or for the instances where the other banks have been penalized, why can't I just look at them in my sample and verify whether my bank is also following up the same practice? And if they are following the same practice, can be highlighted. Again, this will address the expectation of the regulator or the CFO on a regulatory gaps, whether the bank is in non-compliant with any of the regulatory guidelines. Now, I'll give you another example, or a very, very important example, my friend, which I'm sure would be there in many banks which you are auditing currently, and which could become an important point to highlight in the LFA or on the, in your report, is that many of these, gold loan pieces or gold loan valuations which are done by the valuer or the jeweler, if you look at the fee which is paid to them, the valuation fees which are paid to them, normally these valuation fees are linked to the loan value. So let's say if he has done valuation of a gold loan and the value comes to 1 lakh rupee, he will be paid 1% or he will be paid 0.5% of the value of the gold, what he has appraised or what he has assessed. My friend, this is the and some banks have a policy of paying the jeweler per packet or depending upon the pouches, etc. Now, my friend, if the jewelers are getting paid based on the value of the gold, this becomes the biggest conflict of interest per se. Why? Because today, if a valuer is valuing the gold and he is aware that my fees is linked to the value of the gold, obviously, there would be a inherent risk in the valuation. There will be a bias in the valuation when he's carrying out the valuation, because his remuneration, his compensation is dependent on that. Now, this is the issue which can be highlighted by the auditor whenever he's auditing a particular branch or he's auditing a particular bank, that there are potential conflict of interest which is happening, at the banks, in respect of this payment to the jeweler, where the fee has been paid to the jeweler based on the valuation of the gold. And this is, let me tell you, a very, very significant, and the RBI will look at it very differently, because considering the jewel loan portfolio which is there as on today, it's a significant area to look at it. So, my request to all of you, that whenever you are auditing current year, and I'm just giving you all inputs which can be taken up in the current year, which will be very different. Your reporting will be very different as compared to the previous year, which you would have reported upon. If you're finding that your banks are paying to the value based on the, the what you say, the value of the gold or the amount, the value what he has appraised, this is the biggest conflict. Please highlight this issue. In addition to this, I would also request you to evaluate is that if there are banks, if there are entities, and if you're auditing a branch which has a jewel loan portfolio, my request to all of you, considering the recent frauds which have happened in the current year, please count the jewel packets which are there in the branches. Now, you may not be able to measure the jewel packet. However, there are people who measure the jewel packet also, by valuing empty pouches and then by valuing the pouches with the gold so that they can get a difference. Now, at least at a minimum, what you should do, you should just count the jewel packets which are there in the branches, and whether those jewel packets are matching with the live jewel loan. So, what I have done, my friend, I have just tried to give you some of the perspective or some of the important points which can be looked up by the auditor when he is going to, audit the current year, carry out the current year branch audit. And let me tell you with full confidence, my friend, that if you pick up these areas and if you report, even if 2 to 3 areas you find your observation or your comments, I think your contribution to the industry will be much appreciated by the central stat auditor, even by the RBI, and even by the banks. So, in all, what it will do, it will bring a quality report to the, bank as well as to the central stat auditor. And I would request all of you that, just whenever you're preparing for these audits, some of them instances I have already listed down on my slide. However, there are many penalty orders which have come on the banks on various occasions, which can be looked up by all of you whenever you are doing the audit. So this is the other aspect which I thought I will cover it with you, my friend. Now, before I move to the IRAC norm, I will again try to just recap the things which I have discussed with you, because I feel they are very important and very relevant for you to carry out the branch audit in the current year. One point we have just started discussing is on the deposit piece, which I have told you all that deposit is one of the significant area in the current year audit. Second, I have discussed the whole repo rate cut issue, how the same has been affected in the system and whether the EMI has been correctly, redrawn in the system. The third point which we discussed is on the aspect of the job rotation or increase in the employee fraud. How do we report on the employee fraud, and what value addition we can do on the banks to that extent. When we discussed on the entire recent important issues which are happening across the various important RBI circular which have been issued by the RBI, where we are expected to comment upon and where we are expected to ensure the compliances by the bank. And the third aspect which we discussed is on the penalty order which are issued by the RBI on various banks. what could be the learning for all of us, and how can we, what you say, take those aspects in our audit per se. Now, coming to the IRAC norm, my friend, as I told you that there are no changes in the IRAC norm. The same DPD concept or the overdue concept remains. Classification of an account based on the number of overdues, and the criteria for the out of order is similar to what it was there. Extension of DCCO. These are all various what you say ways by which an account could become an NPA basically, and all these have been remaining same in the current year. There are no changes in the loan account in the current year. However, I would just like to highlight you one point which I think important for you to evaluate is that whenever, my friend, you are visiting the branches in the current year, please pick up the cases of security valuation which are less than 5 crore. So let's say you have a housing loan less than 5 crore, which is an NPA case. You have a vehicle loan which is less than 5 crore, which is an NPA case. And try to focus upon how is the valuation for the secured and unsecured has been determined. Whether there is a proper valuation report which is available, or it is completely based on the management judgment and management estimate. This is where RBI has clarified in the current year that the whole mandatory valuation by an independent valuer is required only for exposure more than 5 crore. Less than 5 crore, the bank can have its own policy. So, whenever you are visiting any particular branch or any particular bank, please try to see that what is the policy of the bank for an exposure less than 5 crore, or for NPA cases which are less than 5 crore, whether the banks have been taking independent valuation or they have adopted some different method to arrive at a valuation. Now, as I said, IRAC norm is simple, and I call all these changes in the IRAC norm as IRAC 2.2. However, the 2.0 has become very old now because the changes were introduced in 21-22 when there were a lot of changes were done with respect to the daily, DPD, daily NPA classification, interest reversal, so on and so forth. I think in the current year, except the 28 November IRAC norm, which not, again consolidated all the provisions which were there earlier, there is no changes per se which has been introduced in the IRAC norm. However, what I will again, try to recap some of the changes which are there in the earlier IRAC norm so that everybody can get benefited out of it. Now, if you look at the IRAC norm, my friend, what we are supposed to comment upon is that compliance of the IRAC norm, like for example, the same day versus the next day and daily NPA classification. Earlier, the NPA asset classification was becoming an overdue on T plus 1 day. Now the NPA account becomes an overdue on T day itself. So that means effectively an account will get classified as an NP on the 90th day versus the 91st day versus the 92 day or other alternative day in the previous circular. Uh, Criteria for CCOD classification is again an important point to look at, friend, that and especially the previous 90 days recovery, which I will talk about as we move ahead. CCOD classification is one of the very critical and a very important classification which one should focus upon, because there are three criteria to classify a CCOD account as an NPA, unlike in a simple term loan where if you don't pay within 90 days, you get classified as an NPA. Now, again, an important point is that on upgradation of the account, that the recovery should be zero. Sorry, the DPD or the overdue should be zero across all the accounts which are there. And one more important point which a branch auditor should look at it and should focus upon is on the expired security valuation. Now, you should see that how many security value, because normally the security valuation reports specifically for immovable property is valid for at least 3 years. Now, how many cases the security valuation report has expired, and in how many cases the value has been considered at a nil. So I think these are some of the aspects which one should be aware about and one should report upon. Again, I'm not discussing into the detail on each of the account, how do they classify as an NPA, so on and so forth, because I'm sure the people who are attending this webinar are aware about the basics of those NPA, provisions, etc. Now, I would like to highlight some of the important issues which have come across, at least to my attention, which could be, beneficial to you, or you can pick it up into your, audit of the current year. Now, these three issues I have identified. I've classified the issue on identification, provisioning, and then on the interest reverse and on the upgradation piece as well. Now, these are the four issues, my friend, which I thought I'll cover, and let me go one by one. Now, all of you are aware about that the whole CCOD account is classified based on the previous 90 days recovery. So I think the classification goes like this, that if a CCOD account is outstanding, the outstanding is more than the sanction or drawing power for more than 90 days, the account get classified as out of order. Or if there are no credits for the period of 90 days, the account get classified as an out of order. Or if they are credit but they are not sufficient to cover the interest debited during that particular period, the account get classified as an out of order. I think these are some of the basic elements by which an account get classified as an out of order. Now, whenever my friend, I have tried to see the cash credit account, I think one of the important point which normally is missed by the in interpreting by the bank and as well as by the auditor is what kind of credit should be considered when you are looking at the credit in CCOD account. Whether it should be a bank induced credit or it should be a customer induced credit or it could be both customer induced credit plus bank induced credit. Why it is important? Because when the system is computing the previous 90-day norms, the system is not aware about what kind of credit is coming in the account. The system would consider every credit as the same and try to give the benefit of that credit to the customer for not classifying the account as an NPA. Like, for example, let's look at this example. Let's say you are on 31st October 2025. Now, if I am on 31st October 2025, what is my previous 90 day? My previous 90 days starts from 2nd August 2025. Now, if you look at it from 2nd August 2025, I have got previous 90 day debits of 36 rupees, which is 11 rupees interest, 12 rupees interest, and 13 rupees interest. Now, you have got previous 90-day debit of 36 and you have got previous 90-day credit of 36. How previous 90-day credit 36? Because you got on 2nd, you got 13 rupees. Then on 2nd, you got November, you got, September, you got 11. Then again on October, you got 12 rupees. Now, if you don't evaluate the quality of the credit which is there on the on the credit column, the system will go ahead and classify this account as a standard account. Without looking at it, if you go into deeper, the system will, I mean, if you will observe that the 13 rupees credit which came on the 2nd August is nothing but a term loan disbursement, which was made in the what you say CCOD account of the customer. Because today that 99.99% cases, the CCOD account and the current account of the customer will be one. Hardly there will be account where you could have a current account and CCOD account as a different account. So it is important for us to evaluate what credit is coming in the account, because the bank will disburse the money in the cash credit account. And if the bank disburse the money in the cash credit account, the possibility of this getting considered for computing the previous 90-day credit is very high. So that is why it is important for us to evaluate it, is that what kind of credit the bank is considering while arriving at the previous 90-day debits and the previous 90-day credit. Now, in this particular case, my friend, the system would not have classified this account as an NPA or an out of order. However, if you are an auditor, you will pass an MOC to downgrade this account as an out of order, because you cannot consider a term loan disbursement or what you say as a recovery in the account, because the recovery should happen from the own fund of the customer towards the interest or towards the respective dues. Now, there are banks which have implemented sufficient controls in their either the independent system which classifies account as an NPA, or in their CBS system also, to exclude such a kind of a credit. And my suggestion to all of you would be that you pick up some at least 5 to 10 cases of a CCOD account and try to see that what kind of credits are coming in the account, and if you remove those credits which are ineligible credit, whether the account could be classified as an out of order. I mean, this would be an important criteria to look at it, my friend, in the current year, or so to say, you could have looked at it in previous year also. Now you will ask me, Pankaj, okay, you have given one example to us. What could be the other example where there could be a kind of credit which can come into account which is not to be considered as a eligible credit? Now I have given certain list of the transactions, my friend, which could be there in the banks which you are auditing, on the customer where you are auditing. Like, for example, and these are all on my experience base, what I have come across, I'm just sharing with you all. Like, for example, let's say sometimes there is a change in the sole ID of the customer or of the account. Like, for example, an account is moving from, let's say, Bombay to Delhi or Delhi to Bombay. You would have a sole ID change in that particular account. Now, whenever you will go and see in the Finacle, whenever a sole ID happens, there is a debit and there is a credit transaction which happens in the account of the customer. Now, such kind of credits cannot be considered as eligible credit while determining the account as a CCOD order, CCO, while determining the CC account as a out of order. So the system should have a control to put it in place to exclude such kind of a credit. Manual reversal of charges if you have done, manual waiver of charges if you have done. We discussed about the whole disbursement piece, which I just told you. Then there is a processing fees reversal. Let's say you have charged the customer a processing fees and now you are reversing that processing fees from the what you say from the to the customer. Now these kind of things you can't be considering as a genuine credit from the customer. So the moot important point which one should keep in the mind, if I have to put it in one line, my friend, whenever you're looking at a CCOD account and whenever you are evaluating a CCOD account, whether it should be classified as an out of order or no, basis the previous 90 days norms, you should look at it only eligible credit, and eligible credit equals to customer induced credit. If these are not customer induced credit, they are not eligible credit and should not be considered for the purpose of giving the benefit to the customer for the previous 90-day period. I hope you got the issue, my friend, and and if you have any question, please put it in them in chat box. I will try to address them because these are very critical and very important issues which you can highlight. My friend, you will now the bank people or the branch people have also become smart. You will not find many issues or multiple issues with respect to, let's say, all our traditional aspect, like for example incorrect drawing power, incorrect stock statement, so on and so forth. Now we have to also move from the traditional approach to a more pragmatic approach or a risk assessed approach, where we are trying to find out new issues or new areas where the bank might not be doing the way the circular is intended to implement it, basically. So that is why I'm saying this is one of the issue which I thought I will discuss with you. And a quality of a credit is a very, very important point to evaluate it whenever you are evaluating a classification of a CCOD account. Now, the sampling is dependent upon you. You can pick up 5 random CCOD accounts and look at it. You can pick up SMA accounts. You can look at it because SMA accounts which have a potential to get downgraded might have a higher risk where the branch manager might try to run some transaction. Or you can pick up any other examples also, my friend. The sampling is left to upon you. Please cover this point as part of your verification. Now, this is another important point. In the first example, what we discussed in the first example, we discussed where the bank is not classifying an account as an NPA, even though they should classify account as an NPA. Second aspect, which I'm going to discuss, is very important and very developing issue, wherein whether the bank should classify these account as an NPA, yes or no. And into my mind, when you look at the example, you yourself will agree that this should not get classified as an NPA. Now, you look at this example very carefully, my friend. I will go through one by one. On 3rd February, there was an interest which was debited on the account of 17 rupees, the first transaction in the account, and the amount became 4,041 rupees debit. Then on 11th February, the customer has deposited 25,000 rupees in the account and the customer account went into credit balance. Now, on 3rd February, March 2025, again the account was debited with 11 rupees interest because from 3rd Feb to 11th Feb, the account was into debit balance. So, some nominal interest was charged in that particular account. But the outstanding amount in the account still remains a negative or, what you say, a credit balance. Now, if you look at it, my friend, on 20th May 2025, what the customer has done, the customer has withdrawn or customer has utilized this limit. Basically, this is a limit account. That is why it could become debit, it could become credit also. So the customer had utilized the limit on 20th May 2025. And what happened on immediate utilization of the limit of 15 lakh on 20th May, the account was downgraded to NPA. Please listen to me one more time. the moment account has utilized the limit on 15th of on 20th of May of rupees 15 lakh, the account got classified as an NPA immediately on 20th May. Now, if you look at it, this you will find it very odd. You will say that Pankaj, this account was never into credit balance. So how can on utilization this account can become immediately a NPA account? Now, this is the challenge which many banks are facing, and many banks are trying to address this challenge through various means. Now, people who would have understood this example would try to appreciate that this account has gone into NPA on 20th May because there is no credit in the account in previous 90 days. Or there is no credit means what? 11 rupees interest was debited in the particular account. Subsequent to the 11 rupees interest getting debited, even though the account was into credit balance, but the system expected an account to have a recovery of 11 rupees. And that is why this account has become an NPA at the first place. So what is the point which I'm trying to highlight to all of you, my friend, that today, if you look at some of these accounts, some of the limit account, specifically, sanctioned to the individual and all, you could have this kind of an issue. Now, as an auditor, what is my responsibility? You would be very happy to note that, okay, the account has been classified as an NPA. I don't have any responsibility. The bank is making a provision, no issues as such. Now, if you just try to go back a little bit, my friend, RBI is much concerned about how, the banks are treating their customers, or how the banks are, passing on the benefit to the customer. And whenever any issues you raise with respect to the customer, the RBI is first one to pick up that issue and try to implement at a bank level. Now, here, without any fault of the customer, because he may not understand the IRAC norm the way we understand that I need to, repay the 11 rupees, even though I have deposited 25,000 rupees extra in the previous period. The customer will not understand, and what the bank will do, the bank will go ahead and classify the account as an NPA on 20th May, which is not a not a favorable position to the customer. Now, if your bank is having such kind of an issues and such kind of practices, it is important for us as an auditor to highlight such issues. It is not always, my friend, that you will highlight an issue where the customer should become an NPA and the bank has not classified as an NPA. I think as an auditor, we should have a balanced approach, and we should try to see that the customer, which is in the focus of the RBI in the recent past, is trying to trying to do justice with it. And in this particular case, one may interpret that the customer is not at fault at all, and this account should have not got classified as an NPA. Now, in your branch, in your bank, if this kind of practices are there, you may not be able to pass an MOC to upgrade such an account, but it is important for us to do an LFAR reporting that the bank is classifying an account as an NPA even though the customer was into credit balance in previous 90 days. The previous 90 days concept ideally should run when the account is running into a debit balance and not into a credit balance. So, these are the some of the points which one should highlight it. It is not always that, you will try to downgrade an account as an NPA. If there are system issues, there are system gap, it is our responsibility to highlight such issues as well. Another point which I thought I will speak to you all and highlight to you all is on the whole issue of loan against FD. Now, all of you are aware that, the loan against fixed deposit need not be classified as an NPA, provided there is an adequate margin available in the account, and you can recognize the interest on such advances also because, there is no NPA classification and there's a margin which is available. But the important point is, let's say if the account becomes an NPA, what could be the date of NPA? Like, for example, in this particular case, if you look at it, there was an FD which was of rupees 7 lakh, and the customer had taken a fixed deposit of 5 lakh. Loan was of rupees 5 lakh, and FD value was of rupees 7 lakh. And the interest on loan was obviously 2% higher than the fixed deposit rate. Now, what happened? This was a loan for a period of 3 years. The customer did not pay interest even for 1 year, right? So first year interest is overdue, second year interest is overdue, third year interest is overdue. What happened on 20th February 2026? The whole interest plus principal became higher than the FD value basically, because anyway you have 2% higher interest on the fixed deposit. Now on 31st March, what the bank has done, the bank has not classified the account as an NPA. Because what the bank is saying that on 28th February, the account has the outstanding balance in the account along with the interest has crossed the FD value. So it has become overdue on 28th February 2026. Now, to classify account as an NPA, I will take 90 more days from 28th February 2026, and then I will classify account as an NPA. So this was a view which the bank has taken, and there are banks which are taking this kind of a view. Now, you people are not live in front of me, otherwise I have asked you question to answer. And if you have an answer, you can post it in your chat box also. Do you think the view of the bank is correct in this particular instance? For example, I will classify account as an NPA after completion of 90 days from the 28th February 2026. Or should I classify account as an NPA on an immediate basis on 28th Feb 2026 itself? Anybody has any answer can post it in the chat box. I'll be happy to read the answer of the participants. Uh, Now, if you look at it from an RBI perspective, my friend, what the RBI says? RBI says RBI says very simple that it should not be treated as an NPA provided an adequate margin is available in the account. So somebody is saying it should be 90 days. Okay, somebody is saying it should be a 90 days norm, basically. Okay, understood, understood. I will answer the question in some time. So what the RBI direction is saying, RBI direction is very clear that you should classify account as an NPA. However, you should not classify account as an NPA when there is an adequate margin is available in the account. Now, if you look at it, the definition of an overdue, the definition of an overdue is very clear. Then account is becomes an overdue once you don't pay the dues on the time. That means if you have not paid the dues on the time, you become an overdue account basically. Yes, on an immediate basis, the security is not enough. Immediate basis. Okay, there are some people who are calling it is on an immediate basis also. Okay, good to know. Now, uh, to tell you very frankly, my friend, the account should be classified as an NPA on 28 Feb 2026 itself. Reason being that the account was already running into an overdue. How you will say, Pankaj, there was an overdue account? The customer did not service the interest for first year. The customer did not service the interest even for the second year. So in both the year, the customer did not service the interest on the loan. So the customer was into overdue position, however, was not getting classified as an NPA because there was sufficient margin which was available with the customer against this loan. Now, once the margin is gone, the customer should be classified as an NPA on an immediate basis on 28 Feb 2026 itself. Now, there are banks which are following various practices, my friend, in the industry. Some are going back and making the account NPA backdated when the customer would have crossed 90 days. However, at a minimum, my friend, the bank should classify this account as an NPA on an immediate basis when the FD is crossing the value and not wait for 90 days norm. Okay. So first point which we discussed, my friend, was on the whole piece of classifying account as an NPA, which is on quality of credit. I will again go back to my 3 points because they are very relevant and very important, my friend. So we have discussed the quality of credit in the cash credit account, where we discussed that the disbursement should not be considered as part of the credit. We discussed on the classification of NPA in the loan against FD, what should be the date of NPA, whether it should be immediate NPA or it should be the 90 days hen onwards. And we discussed the last point on classification of OD account with a credit balance. That there are two instances which we discussed where there could be a MOC on downgradation, and there are one point which we discussed where there could be comment in the LFAR where the account is getting classified as an NPA but should not get classified as an NPA. Now, another important piece which I have been discussing at multiple forums in the previous year also, and I think I will take this opportunity to discuss with you all also, that I mean, I still believe there are banks, my friend, which are not classifying account of a co-borrower as an NPA. What I'm trying to address, I'll just give you a brief background. Now, there are loans, let's say a housing loan which have been given to the customer, will be by, let's say, husband and wife. Okay, these are assessed. There could be there could be the husband and wife, both the income might be considered, or one person's income might be sufficient to give the kind of a loan, and that is why you will not evaluate the income of the second applicant, basically. The eligibility criteria is normally determined on the basis on the profile of the both the borrower, that they both should be earning and both should be having a sufficient income, or it could be on the profile of one borrower also. Now, if you look at it, the criteria is what the borrower and co-borrower are equally responsible to service the EMI on a regular basis. And default by both would lead to account getting classified as an NPA. So it is not only the responsibility of the primary borrower, but also of the co-applicant to repay the loan on a time. Now, what is happening, my friend, in the banking industry, barring few banks, largely private sector bank, I think, have tried to address this problem, but I believe still public sector bank have this kind of an issue, that whenever they classify a loan of an NPA, of a let's say a co of a account of a borrower who is also co-borrower, only primary borrower loan is account is classified as an NPA. Like for example, if you look at this case, let's say there was a housing loan which was taken by primary borrower and the co-borrower also. Now, let's say there is a default in this housing loan of 10 crore. Now, the primary borrower has a auto loan of 50 lakh rupees. Now, what the bank will do, bank will immediately classify the 50 lakh rupees loan also as a NPA. However, let's say a co-borrower has a, forget about the credit card which is mentioned. Let's say the co-borrower has a personal loan of rupees 5 lakh. Now, in today's situation, what happens? This 5 lakh rupees account does not get classified as an NPA. Why it does not get classified as NPA? Because in system, the co-borrower account is different as compared to the primary borrower, and only the cust ID of primary borrower is tagged as an NPA and not the cust ID of the co-borrower. And this is an issue which has been raised by the RBI, by us to the RBI at multiple forums, that why don't you come out with a clear guidelines on this? Now, I'm sure all of you would agree that in this particular instance, the primary and the co-borrower both should get classified as an NPA, and there is no exemption for any of the two. However, if you go to the bank, if you speak to the branch manager, they will not have any clue on this. Even the some people at the HO will not have any clue on this. So, and as I mentioned, that there are they take a benefit of the doubt, they take a benefit of the IRAC circular which mentions the term borrower. But in my belief, the borrower includes, the term borrower includes the co-borrower also. So the co-borrower is not very different from the perspective of the borrower. So ideally speaking, both should be considered as a borrower in that sense, and both should be tagged as an NPA whenever, let's say, a home loan or a joint loan is becoming an NPA. And there are banks which have put out their policy in the public domain, which are saying that they are classifying account as an NPA basis either of both the borrower as well as the co-borrower. Now, that is why, my friend, this is again a fourth important point which I thought I will highlight to you all. And if you look at the guidance note which is issued by the Institute of Chartered Accountant of India, a beautiful document published by them, and I would, request your attention on one of the annexure which is mentioned in the guidance note. And one of the annexure as part of the guidance note is also where the guidance note try to include a letter from the RBI which highlights the typical reason for divergence which has been identified by them. Divergence means where RBI has identified issue, but the auditor or the management could not identify that particular issue. Now, if you look at the current year divergence, a very important point which has been highlighted by the RBI in their inspection report is point number 4. And I would request each one of you to just spend, half a second to read this, half a minute to read this line. What it says that, fourth point, all of you, please pay attention, because this could become one of the significant MOC, in your audit in the current year. The bank, what they're saying, that the bank had not implemented as on 31st March 2024, the logic whereby default by either the borrower or the co-borrower, either in their individual capacity or a joint capacity, leading to classification of at least one of the account as a non-performing, will lead to asset classification downgrade of all the remaining loan account, irrespective of record of recovery in the remaining loan account. Now, what they're trying to say is that if you are classifying account as a either by the borrower or by the, co-borrower in their individual or a joint capacity, all the accounts related to that borrower should be classified as an NPA. So, like for example, if you look at it, let's look at this case, my friend, which will give a which will give a good clarity to you. Let's say there is a housing loan. A housing loan, A is a primary borrower and B is a co-applicant. Okay. Now, the housing loan of A and B has gone into an NPA, and there is an auto loan of a primary borrower. The auto loan of a primary borrower will also become an NPA. Why? Because the borrower A will get tagged as an NPA, and all the loans against the borrower A will get tagged as an NPA. Now, let's say borrower B, who is a what you say a co-applicant, also as a credit card or also as a personal loan. Now, what happens currently, my friend? The borrower B does not get classified as an NPA because the system functionality is such that the borrower A only is classified as an NPA. This becomes a very important point for us to evaluate, that you should look at it, both the A and B should get classified as an NPA, and all the facility of A and B, whether it is auto loan, credit card, mortgage loan, or any other loan, should get classified as an NPA. Now, one may go and argue that, let's say, uh, Mr. A and Mr. C, let's say Mr. A and husband and wife, and Mr. C is a son of Mr. A and B. Now, let's say Mr. A and Mr. C are co-applicant, are primary and co-applicant in case of auto loan, and the auto loan account or A has become an NPA. Now, C also has a personal loan, also as an, with the bank. Whether I should go and call C also as an NPA, right? Whether the personal loan of C also should get classified as an NPA, or whether the C should get classified as an NPA. I think the answer is very simple, my friend. There is no fault or there is no default on account of the C or on account of the auto loan. So making C as an NPA will not be a relevant to do, or may not be a correct thing to do. And that is why only A and B in this particular instance should get classified as an NPA. And my request to you will be that please restrict yourself to A and B as of now, for the current year at least, till the time the RBI gives any very clear direction or gives any what you say, a clear indication that how do you classify the account as an NPA in case of co-borrower. So in this current year, at least make B as an NPA at least first, and then we will see next year if we can make C and D also as an NPA. So my question, sorry, my suggestion to all of you, okay, my question to all of you, that has anybody in their past year, 1 or 2 years, classified any account as an NPA basis the co-borrower logic in any of your branches? Has anybody done it? If you have done it, please post in the chat box. I'll be happy to read them if anybody has done it basis the co-borrower classification. And this is an important one which one should look at it. Okay, there are people who are saying that the co-borrower NPA has been made. I think it's a good start to have it, and I'm sure here the bank will not be able to argue with you much, because they also understand that they will, if they don't classify the co-borrower as an NPA, this might lead to a non-compliance with the RBI direction, and there could be a potential divergence the way the RBI has highlighted. In respect of one of such cases, there could be instances in that particular branch as well. So I think there are some questions which I will take at the end, as I mentioned at the beginning itself. Now let's move ahead, my friend. Now, what we have done, we have discussed all the issues with respect to the identification of an NPA. And, my objective to all of you was not to bore you or give you, guidance on basics of NPA identification. My idea was to discuss some of the practical issues which could have an impact, or which could have either the reporting or a financial impact on the branch financial statement. So those were the issues on identification piece. Let's come on the upgradation piece. In the upgradation, my friend, I will just try to highlight three issues which I have faced across multiple banks and in multiple audits, which carried out by me in my experience. Now, you would be aware that there are loans which are linked to the ECLGS, or there is a guarantee company which provides some kind of some portion of the loan if the loan goes bad. Now, some of the banks have a practice of, let's say, this is a particular example which I thought I'll share with you. Let's say there is an opening balance of 5 crore rupees. the interest for the account has been debited for 3 months and no amount has been received. And this is an illustrative example. Don't try to compute the interest, how it can be very low, less or high kind of a thing. This is just the illustration purpose I thought I'll share with you. So what happened for 3 months, the customer did not service the interest of the on the account. And then what happened? The interest meter stopped because the account got classified as an NPA, and the the interest would be running in a memorandum account per se. Now, let's say there is a filing which has been done by the bank with the national company on guarantee, etc. And the money has come from the ECLGS guarantee of 1 crore rupee. Okay, now the post this recovery of the money from this guarantee company, what the bank did, the bank had upgraded this particular account to standard category. Because if you look at it, all your overdues are recovered. What was the overdue? The 3 months interest plus, let's say, more 2 lakh rupees or 4 lakh rupees interest. So obviously your recovery is much higher as compared to the overdue in the particular account. Now, as an auditor, what is your view? As an auditor, is this a correct approach to do, or is this the right approach to do? You can answer me in the chat box, whether this is the right approach by the bank. Whether the bank can upgrade such account as a standard account based on the recovery from these guarantee companies, etc. Okay, good. I think there are some people who are, responding to the cases as no. So I think this is a learning for us, because today when the recovery will come in the account from the guarantee company, the system would not try to, system would not bifurcate this recovery as a different recovery as compared to the customer induced recovery. And that is why it is important for us that whenever we are looking at such accounts where the recovery has been made, or it is important for us to look at the upgraded accounts and whether any account has been upgraded based on the recovery from the such guarantee company, etc. Now, theoretically we all will agree that this cannot be upgraded, but let me tell you, practically there are banks which are upgrading such accounts based on the recovery from this guarantee company. So it is important for us to identify such accounts and downgrade them again as an NPA, giving the reason that these are not the recovery from the borrower, these are the recovery which have come from various other entities and not from the borrower, basically. So this is one point, and there are banks, my friend, which have implemented various control, and the controls are basically that whenever, let's say, you have got the settlement from the particular borrower, these will not be considered as a customer induced recovery, and they will be excluded from while considering the recovery from for upgrading an account to a standard category. So there are checks and balances which can be placed in the financial system, or which can be placed in the CBS system, and this is, I'm giving you an example, live example, which I've come across in my entity where I have audited. Now, the other point which I thought I will check, try to highlight with you, because still there are instances which have been identified by the RBI where account is getting upgraded even though there is overdue in the other account. Now, for example, let's look at it. This example, let's say there are three loans of a customer: personal loan, housing loan, and auto loan. There are DPDs in the personal loan. There are DPDs in the housing loan. There is no DPD in the auto loan, and the account get classified as an NPA on 29th November. Now, why it get classified? Because housing loan you have a DPD. So obviously, going by the customer classification norm, all personal, housing, auto loan will get classified as a NPA. Now, on 11th March, what happens? Suddenly, the customer walks into the branch and pays the overdue of the housing loan, and makes the on 11th March the DPD in the housing loan is nil. And what happens? The bank upgrades such account as a from a NPA to the standard category. Now, even though there are DPDs in the particular account, because the bank believes that I just need to recover the overdue amount in the loan which got classified as an NPA and not in the other loan, and it get automatically upgraded. Now, I would like to know from all of you all whether this is the correct way to do it, or this is the incorrect way, and this is not the intent of the regulator. Basically, I would request all of you to answer in chat box whether the bank is correctly upgrading such accounts in on recovery of only the housing loan overdue and not of the other loan, and there are overdues in the account of personal loan and the auto loan. So I would request all of you to highlight or reply whether this is the right approach to do or this is not a right way to do it. So, okay. So somebody has replied, I think so. Should not be upgraded. Okay, good. So obviously, these accounts should not be upgraded to the standard category. The answer being very simple, but still, let me tell you, my friend, there are banks which are upgrading such account to a standard category. Let me tell you, my friend, because what happens earlier, the view was that the account which has an overdue only should be recovered and not the otherwise. However, the RBI norms are very clear that you should have a nil DPD in all the accounts, which then only you can upgrade a particular account to a standard category. Now, coming to another important point, which I thought I will speak to you all, and this is the important element in the current, audit. Like some of the accounts which are, sometimes are written off by the banks. So there would be account which would be written off, like for example, personal loan, unsecured loan. They are written off, let's say, after a period of 1 year, kind of a thing, and they are removed from the books of account also. Now, the issue comes that whenever such accounts are coming for the upgrade, because what will happen, the housing loan will still get classified as an NPA and will remain as an NPA because you have a written off account sitting into your books. Now, what happened in this particular case? 1,05,000 rupees was an NPA and was subsequently written off by the bank. Now, Mr. A, who was a customer, approached the bank and said that I want to upgrade a housing loan because my housing loan DPD is zero. So, why are you classifying my housing loan as NPA? The bank said that, okay, what you do, you pay us 1,05,000 rupees, which was written off, earlier, and what we will do, we will upgrade your housing loan facility because anyway, there is no DPD in that particular account. So what the bank did, the bank recovered the money and intimated to CIBIL as status closed for the PL account and also upgraded the housing loan to the standard category on 3rd March. And there was nil DPD in the housing loan. Now, I want your opinion on this particular classification, whether the bank is right in doing an upgradation of housing loan after recovery of 1,05,000 or the bank is incorrect. And I want you to just give me some reason that why you think that this is not a right approach to do, and whether the bank should upgrade or should not upgrade. And if the bank is right in doing so, why so? If the bank is not in right in upgrading, why not? And I would expect, and here the actual test of the IRAC now comes into play, because here the interpretation comes into play that what do you mean by an upgrade of an account? Anyone, if you can answer, it will be good for me to read the answer. Hmm. So somebody is saying that yes, it looks right logically. It should be upgraded and there are no overdue directly or indirectly. Good to have this kind of a view. Anybody else, whether the upgradation by the bank is right or wrong? On recovery of 1,05,000 rupees, which was a written off amount, and the bank has subsequently recovered it and has upgraded the account. Yes or no? Okay, I think I have only one answer, so I will just try to get into the answer by myself. So, my friends, if you look at it this very simply, the IRAC norm is very clear. The IRAC norm says that you should recover the entire overdue once you are upgrading the account from a NPA to standard category. Now, what has happened? The personal loan account was written off. When the personal loan account was written off, what has happened that you had not charged the interest on that particular account. If you look at it, what what you say, uh, uh, the bullet number 2 on my slide, it says the PL facility of the A has been classified as an NP and written off by the bank in the books. And post write-off, the bank has stopped accrual on interest on such account in the system. So typically speaking, this whole 1 lakh rupees, 5,000 rupees is a position on the day of write-off. However, the RBI says that you should recover the entire arrears. That means till today, whatever interest would have become due to me, due to the bank, should be recovered to upgrade the account to the standard category. Only because you have just done a prudential write-off in the account and you have removed it from the books does not make you, make you stop charging the interest in that particular account. So when the account is coming for an upgrade, you should recover the interest which was due at the time of write-off you should also recover the interest which is due from the date of write-off to the till the till the period when such account is getting upgraded. So that is an entire arrears. The entire arrears is not only the amount which has been written off. So it is very important for us to also to verify that when such account is getting upgraded and what is the amount of recovery which the bank is doing to upgrade such account. Sometimes it becomes very tricky, my friend, and these are the areas which one should look at it and try to give their MOCs upon. And this is what the language in the master circular, which has not changed, my friend. It says only upon payment of entire arrears of interest and principal to all the credit facility. When it says entire arrears, it means till today, whatever I was supposed to receive, the customer should pay me, and then only I will upgrade the account to the standard category. And if you have any issues with respect to the, let's say, the issues in case of identification aspect or a IRAC norm aspect and all that, you could simply, comment on these clauses of the LFR which has been prescribed by the RBI. I think provisioning aspect, I will try to just highlight one or two issues, my friend, and I think I will try to highlight it from here only, which easy for you to look at it. Now, one of the point which we have seen in couple of instances and which will be useful for all of you also is that, like for example, in this particular case, what has happened, the bank has taken a valuation report of the mortgage property, and the market value of the property is 4.5 crore. The realizable value of the property is 4.2 crore, and you have a distress value of 4 crore. Now, what has happened? The bank has carried out auction of this property at a base price of 4.2 crore, which is the realizable value. However, there was no bid which were received, and since January till March, there were multiple bids which were failed. I mean, there were nobody who was ready to come up and take this property at 4.2 crore. Now, the bank, what they have done, they have made provision as at the rate of 25% on the whole outstanding, considering that the property value is 4.5 crore basically, and they have what you say sufficient value supported to the outstanding. Now, there are point which I'm trying to highlight is that you should look at the cases where there are multiple auction failures which are happening in the branches. That means the branch is putting up the property for sale. However, nobody is coming and ready to take up the property at a value which the branch or the bank is quoting. Now, this raises a basic question, a fundamental question on the realizable value of the property, that whether such property is worth rupees 4.2 crore or worth rupees 4.5 crore. And it should, what you say, as a matter of a professional skepticism, one should question that whether the value which one has taken at 4.2 crore is the right or wrong. Because why nobody is taking this property at 4.2 crore if some valuer has given a value at 4.2 crore? And this would necessitate a revised valuation by the branch, where you could request the branch to take up a fresh valuation of this property, because nobody is ready to take up the property as 4.2 crore. See, the branch will always try to argue, my friend, that okay, I have a valuation report which can, be sufficient for a period of 3 years. Why should I take a new valuation report now? But I think the point which we need to highlight to them that today, if you have taken a value at 4.2 crore and nobody is coming to take the property at 4.2 crore, how it can be a realizable value of the property considering the multiple auction failure? And this necessitate a question to the branches that why they should not take a fresh valuation report. Another point which I think I briefly touched upon in the beginning itself, my friend, is that whenever you're looking at, let's say, cases where you have cases where plant and machinery has been taken as a security, and sometimes the banks do take a plant and machinery value based on the valuation report, and what they try to argue is that the if I've taken a value as per the valuation report, I need not review this, value unless and until 3 years have lapsed. I think this is a where we need to educate them that these 3 years valuation report policy is only applicable for the immovable properties and not applicable for the movable asset where it comes to plant and machinery. So if you are taking a value as per the valuation report, ideally what you should be doing, you should be applying a haircut on that whole valuation report at a some percentage, 15, 20% as determined by the bank. And then you should be taking the value for the purpose of provisioning, because all of us know that the plant and machinery value gets depreciated whereas immobile property value normally appreciated. So you can't equate the two, and you should apply some kind of a haircut while taking the value of a plant and machinery. And this is what I was trying to quote you in the LFAR itself. There is a point which is given, my friend, which says that you have to what you say, if there are circumstances which require a shorter duration valuation, you should insist on the valuation itself. Like for example, the instant what we discussed, my friend, where you have a valuation report, but whenever you are doing the auction, there are multiple auction failures which are happening, and the nobody is ready to take up that property at the value which has been determined by the valuer. So that is a circumstances which warrants a shorter duration at 3 years. Yes. Now, I think the last leg which I would try to address upon is on the interest reversal in the account. Now, here also we have seen a diverse practices, my friend, and I will try to request all of you to verify it at your branches or at your banks, whichever you are auditing. Like for example, we have come on the instances. Let's say the example which we were discussing at the beginning itself, my friend, where account has been classified as a NPA on 31st October, okay? And on 31st October, the account has turned into an NPA. Now the question comes that whether the interest, how much interest should be reversed, and whether there should be an interest reversal. If yes, what should be the interest reversal? Now look at this case, my friend. Your drawing power in the account is 100 rupee. Your closing balances across all the months or across all the period has been less than 100 rupee. For example, you have 93 rupees as a outstanding balance, or you have 80 rupees before application of a interest as outstanding balance on 31st October. Now, if you go from July onwards, you got 31st July interest, you got the receipt on 2nd August, 31st August interest was served on 2nd September, 30th September interest was served on 2nd October. Now, the account became NPA on 31st October, and there was an interest which was charged. Now, the question is that the system has reversed nil. System has not reversed any interest in this particular account, because system is saying that your outstanding is within the DP, so the interest can be served with the DP value. Now you all have to answer me whether this is right or wrong. I think somebody answered me that it has to be 13 rupees. Okay, good. So obviously the answer is right. It has to be 13 rupees reversal, because what the RBI circular says that you should actually recover the interest from the customer, and not utilize the same from your unutilized limit. I mean, you can't be saying that I will fund my own interest income. Like for example, today in this example, if there is no interest which has been reversed, what the system is trying to say, system is trying to say that 20 rupees available unutilized limit which was available to me, that means 100 minus 80 should be considered as a service, should be considered towards servicing the 13 rupees interest debited. However, that is not a right way to look at it, and you should reverse the interest of 13 rupees in the account, my friend. And there are some banks which are following this kind of practices, and I think you should try to highlight if there are any such discrepancy which you come across. So I think that is okay. One more important point, and here I think this is a point which is less talked in many seminars or conferences or webinars. But I thought I'll try to pick up this question also. My friend, many a times, we get into too much into, let's say, NPA classification aspect, NPA provisioning aspect, and NPA, what you say, interest reversal aspect. However, another important point, and this I am telling for the first time to all of you, there is an important point to also look at it, how the appropriation is happening in the account. So, like for example, in this particular case, if you look at it, there are 3 term loans account, and I would request all of you to pay an attention, because this is a biggest issue which the banking industry is doing, which we are not aware, and I'll tell you the reason also. Now, if you look at, there are 3 accounts which are there: term loan 1, 2, 3. There are outstanding balance principal, and there are outstanding balance interest. And these accounts are NPA accounts. All of these accounts are NPA account. There's the interest which is to be recovered, then there's a principal to be recovered. So first balance is 5 crore, second is 2.8, third is 1.5. Now what happened on 25th March? the bank received the recovery in TL1 account and appropriated the same again, principal and interest overdue, 5 crore. Post recovery, the bank had closed account 123. The policy of the bank is to appropriate any recovery first against the principal and then against the interest. Now, my question to all of you is that what the bank has done, whether that is a right or wrong, appropriating the whole 5 crore rupees towards first account. And the people who are saying wrong should also tell me why it is wrong. Hmm. First charges, then interest. Okay. Then the policy of the bank is that you should first recover against principal and then against the interest overdue. For NP account, recovery of all years to be done first as per. Okay. Anybody else? Very tricky issue. First appropriate entire overdue interest. Okay. Okay. Interest will be recovered first. Perfect. 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 I think somebody has given a very apt answer. See, what does this policy says? The policy says that you should appropriate the recovery first against the principal, then against the interest. What smartly the bank has done, smartly the bank has appropriated the principal of only one account, whereas there are principal which are remaining in TL2 and TL3 also. So ideally the 5 crore rupees should get first adjusted against 4 crore, 2 crore and 1 crore, which is a principal outstanding. And if there is any recovery which is outstanding now pending to be appropriated, then one should go to appropriate against the interest amount and not vice versa. So banks, what they do, they try to appropriate this manually to these accounts so that their profit and loss account shows a good picture. Because typically what will happen, you will have a recovery of 1 crore which will be getting credited to P&L account as an interest income. However, there was a adjustment of 1 crore rupees in the principal outstanding, you would have a provision release of only 25% considering this is a DB1 account. So that is why, banks try to take this amount to the interest amount and try to show a good profit as compared to reducing it from the principal and taking the release of the provision. So what is the learning we have from here, my friend? The learning of us is that whenever you look at an appropriation, try to look at it that it should not happen that only one account the appropriation is happening and all other accounts are left open. The principal recovery first should go to all the account and then interest recovery should start. It should not happen account by account. It should happen a borrower wise appropriation and not an account wise appropriation. So I thought I'll try to cover this aspect also. And wherever you find any issues with respect to the issues with respect to the appropriation, you have a LFAR clause which has been given very specifically to highlight such kind of discrepancies. Now, I mean, my friend, coming to the end of the whole NPA IRAC norm issue, and I thought I will try to take up the case studies or practical issues so that one can get benefited out of it rather than discussing the IRAC norm. There are some minimum audit steps which one need to do it, which I have just tried to highlight it as part of this slide, my friend. That means first what you should do, at least you should do comparison of NPA of the current year versus the previous year. You can do it on multiple level, name of the customer, date of NPA, outstanding balance, so on and so forth. Ideally speaking, the outstanding balance on the NPA account should not go up unless if it goes up, you should have a very justified reason to say. And you should verify if there is any changes in all three fields as we go ahead. And then you should go, there is an increase in the outstanding balance. Why? Recovery charges should be debited to P&L account. They should not be debited to the outstanding account or to the NPA account, etc. Now, whenever we just said that, the verification of a recovery in the NPA account should also get, scrutinized thoroughly. It should be as per the recovery policy of the bank, which I just told you. And it should be from a NEFT or RTGS recovery. It can't be a check deposit entry or it can't be a suspense entry per se. Then verification of security valuation for the cases which is shifted to doubtful category in the current year. This again becomes an important, my friend, because normally there the unsecured provision policy kicks in whenever you're getting classified to doubtful category. and verify the fraud accounts which are there and compare them whether the same fraud was there last year. It should not happen an account which was tagged as a fraud in the last year has been removed from the fraud tagging in the current year. If they are so, we should have a justified reason to do so. And I think if you ask me, friend, very simply that what is the important thing which one should be aware about, or what are the top focus area, I will try to highlight these 5 to 6 areas which are a top focus area for me at least. That means you should review the high value deposit account which are there, review their nature of transaction in the account, process of confirmation reconciliation we discussed, review the gold loan portfolio which we have already spoken about with respect to what is the policy which has been implemented by the banks, uh, counting of the jewel packets and all that, etc. Then mule accounts one should also verify, my friend. Identify if there is any suspicious transaction in the inter-office account, or there are fraud which have been reported in the particular account, one should look at it. Then there are loans with our pending security creation. This is another area which RBI is trying to pick up, my friend. And it will be important for us that before they pick up, we should pick up that if there are loans which are pending security creation, if they are pending security creation for a longer period, we should try to ask the questions around it. We should try to use our professional skepticism to see that whether really the security is available with the bank or the security is not available with the bank. If the security is not available with the bank, tomorrow if the loan becomes NPA, the probability of the loan recovery is hardly anything, because there is no security available with the bank per se from that perspective. So it is very important for us to look at it, the account where the security creation is pending. Loan against various government scheme, you should review their processes, review their system of the disbursement aspect, of the eligibility aspect, because slowly we are observing that there are instances where the loans have been given under various government scheme which are prone to fraud or prone to the misuse also. And then again we discussed about the whole system control or automated control on the fee accrual or NPA areas. Now, other areas, where you can focus upon, my friend, which could become an important point for all of you, is on this refund of the proportionate locker rent. I will again and again repeat to you, and I just hope that all of you come up with some MOCs in this particular area, because this could be a reversal of the income. Because typically, what will happen? This would have got appropriated towards the income over a period, and there could be an MOC on reversal of income from a locker rent area also. Another important point, I think, which one should look at it on the whole DEF process. If you are having any deposit account or any fixed deposit which is overdue for more than period of 10 years, ideally this should get classified to the DEF authority, and it should not remain with the branches. Uh, Somebody is saying that, okay, I'll come to the question later on, I think so. Uh, Transfer to the debt based on the transaction which I just mentioned, that 10 years, if there are any deposit account which have crossed 10 years, it is an important for us to, report upon that the amount should be transferred to the debt. I think that is okay. I think this is what I have been speaking about all the time whenever I speak on the bank audit, that there are some things which you should follow all the time. That means one should have a clarity and quality in the reporting in LFAR. You should not be using ambiguous language in the LFAR. That means you will write everything which an account can become an NPA, but will not downgrade. We will not downgrade the account as an NPA. I think that is important, that we should have a clarity in the okay. In our LFR. Again, an important point which everybody faces a issue with respect to, a timely completion of the audit. I think we should also try to escalate our issues, our, pointers, whatever is there, to the higher authorities. If we are not getting the data, we are not getting support from the management on a timely basis, and not before 2 days of signing the financial statement. If you're not getting a support, you should be highlighting these issues from the day one, and not at the end of the audit period, or just before 1 day from signing the financial statement. And as I'm saying, independent professional judgment should be used. You can take guidance from others, but ultimately you should do what you feel is right to do, and communicate key issues to the HO or the SC on timely basis for early escalation. Like, for example, if you've identified there are any system issues, or there are any issues which you want to identify, highlight, which would not be restricted only to your branch, would be restricted to multiple branches, you should do that on an early basis and not wait for writing in the LFAR or writing in the audit report. As I said, professional skepticism should be applied at multiple places, which we have discussed. And uh, my only request to you, all of you, will be that you should focus on the audit process versus areas of MOC. Let me tell you, my friend, there are smart branch manager who will try to, occupy your time and your energy in one or two accounts, which they from day one they know that these accounts they have to downgrade to NPA because of the inherent weakness or inherent risk in that particular account. But what they will try to do, they will try to argue with every time whenever you reach the branch. So my suggestion to all of you is that please try to restrict this kind of a what you say discussion, lengthy discussion with the branch manager, with the zonal head, etc. If you think this account is an NPA, this account should be classified as an NPA, and you should just pass an MOC to the extent. Now there could be multiple ways to deal with such kind of a thing, but what I'm just trying to say that you should try to cover entire audit rather than get involved yourself in one or two accounts here and there and spend your time. And as I said, you should be relevant and updated. That means you should be quoting the correct RBI circular. You should be quoting correct provisions of the RBI guidelines. Whenever you are raising an issue, sometimes we have seen that people quoting a circular or reference of a circular which is already withdrawn by the RBI. So then it becomes a important for us to look at it, important circular or updated circular. This is just for all of you to review that the number of branches which are audited by SBI as on today across all the 12 banks is approximately 24,196, which was 24,795 in the previous year. So there are 500 branches which have reduced in the current year. And I think the leader in reducing the branches is Bank of India. What I understand is because of their centralized process where the number of branches have reduced from 2,860 to 1,843. And obviously the number of branches in all these public sector banks have gone up only. So I think that's all, my friend, what I had from my side. I will just go to the chat box and try to see if there are any question which I want to, address upon. I will start from the down. PPT, I think, will be shared. Still, branch manager not transfer in def even 10 years are passed. My friend, if 10 years have been passed and the branch manager is not transferring these amount to the def, it becomes a non-compliance with the RBI regulation, and you can highlight in your main report as well as in your. And I think there is some clause in the LFAR which is trying to address this point. Somebody said that locker reversal amount will be immaterial. Sir, I agree with you. It will be immaterial, but this is a non-compliance with the RBI regulation. And when it comes to non-compliance with the RBI regulation, there is no materiality clause. I mean, the banks where the penalty would have been levied, I am sure the amount will not be material enough to be look from that angle. So I would request you that whenever you are looking from a RBI regulatory compliance perspective, please don't consider materiality as a threshold, because sometimes RBI may not look at a materiality, it will look at it non-compliance with the RBI, RBI direction. I think, 1 minute, I will just try to see if there is any other question which I need to address. Mhm. First, we have to take a distress value, consider the depreciated value for the provision. Yeah, that is okay. That's fine. That's fine. This was one question which I thought I'll address. Mr. A is a partner in the firm and director in other company. Bank has financed both firm and the company. If the firm is classified as an NPA, whether the company will be classified as NPA, direct. So there is no relation between the company and the firm. I don't think so, because they are completely different legal entity. They are not coming between the co-borrower and joint borrower category, and they were not required to, service the dues of a other firm or etc. So that is why I don't think so. They would be, classified as a NPA. Now there are multiple questions which gets raised. Sir, what is the maximum number of bank audit we can sign? I mean, I think so. The bank audit which you can sign, which get allocated to particular firm. Obviously, I'm not an expert into it, but I can tell you is two audits per firm. So I'm sure you can audit only two audit per firm. Now, coming back to the moot point and coming back to the concluding points, which I thought I will share it with you all, is uh, okay. In NP account, no interest is charged. Whether recovery start, overdue amount is not known, the account is flowed. How to address this issue? No interest is charged whenever recovery start, overdue. I think it may not be possible that the bank may not have the interest overdue amount, because whenever the bank has to upgrade an account from a standard category, NPA category to a standard category, they have to, satisfy themselves or try to satisfy you at least that all the overdue has been recovered. And my friend, if you don't have any instances or any supporting or any details of the overdue amount, whether it has been recovered or not recovered, please don't allow the upgradation to happen, and you can pass an MOC to downgrade such account and say that you don't have the detail of an interest overdue. There could be possibility that there will not be any interest due. I think we need to do a little research on the particular account. But if there are accounts where there is an interest reversal which has happened when the account has been downgraded to NPA and now they are getting upgraded without any detail, I think we should not allow such upgradation to happen. Now, coming to the concluding point, my friend, I think in the current year, one should focus upon uh, what you say. What you say. There are in the current year audit, one should pay a focus. One should try to focus on the bank audit. And when I say focus, I have some terminology attached to it. I will try to address one by one. So when I say focus means the first F is nothing but a fraud related item, potential fraud, or due to job rotation, there could be a potential fraud, or there could be a potential fraud which could be because of the gold loans which are involved. So F stand for fraud, O stand for overdues. That means we should verify all the SMA account, all the overdue account, whether there is an appropriation which has been done, whether the correct appropriation has been done or no, and whether the correct classification of account is an NPA. I think C should be compliance with the regulatory guidelines. We have spoken about so much about the important RBI circular and important RBI provision which one should keep in the mind. I think as a branch auditor, if we bring out instances where the bank has or the branch has not complied with the RBI circular, that will be a appreciated point from bank as well as from the regulator as well. And U stands for utilization of the loan. As I mentioned, the end use of the loan is a very critical in the current situation. So one should look at the end use of the loan and should try to see that whether the fund which is disbursed has been utilized for the purpose for what it was intended, and it has not been utilized for evergreening as some other account. And I think S stands for a security valuation or a security creation. I spoke at length that how the security valuation is important from an NPA provision perspective, and a security creation is again an upcoming area in the eyes of the RBI. So I will just try to conclude with these things. I think there is one question: how to check in system that manually the sole ID has been changed for NPA classification. My friend, whenever you have a sole ID change, there will be an entry, a debit and credit entry, which will be there in the books, there in the system, which you can look at it. Whether the recording will be available due to some reason, I will not be able. Okay. How to.
Hello.
आपका आवाज नहीं आ रहा है पिंकी मैम।
हाँ, मेरे ख्याल से पंकज जी का हैंग हुआ क्या? मुझे लगा वो कुछ बोल रहे, मेरी तरफ से हैंग हुआ।
नहीं नहीं, वो उनका नेटवर्क का थोड़ा प्रॉब्लम है, तो अपन ज्वाइन नहीं कर रहेंगे वो।
ओके ओके ओके।
हम्म।
कर रहे हैं क्या ज्वाइन?
Am I audible, Preeti? Pinky?
Yes, 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 yes.
Okay, okay.
Yes, yes,
Sorry,
yes.
there is a
I
little bit
thought
network issue.
from my side it was an point, but it was from your side. So I think you had covered all the questions, whatever were in chat box.
Yes,
Yeah.
yes, I've covered it.
Yeah, so it was a very great season. One question from my side in one example you told that on per 4.2 crore the asset was not auctioned. So in that case, it is alarming situation that if we can't sell the property or we can't sell the plant and machinery. So in the because they try because in your example you told that they have taken 2 times they try to sell the plant and machinery.
Yeah. So, Pinky, what I was trying to highlight is that, in this particular cases, wherever there is a multiple auctions which have been, done by the bank at a particular
Hmm.
value. In my example, I gave a value of 4.2 crore.
Hmm.
And if
Hmm.
the bank is not able to realize this money by way of an auction, that means there is no buyer in the market to take this property at
Hmm.
4.2 crore.
Hmm.
So the value which has been assigned in the system for computing the provision is not right. Ideally,
Correct.
the branch has to take a fresh valuation or has to take a haircut on that 4.2 crore, let's say 10-20%. But in our practical experience, whenever we have got such instances, we have told the branch to get a fresh valuation. This valuation we will not agree upon because they themselves have instances where nobody is ready to buy the property.
Yes, but in case of plant and machinery also, I think we should take a fresh valuation because if
So
it's
in
not
case of, yeah,
sellable.
Pinky, in case of plant and machinery, I think the practice has been of multiple banks is if the valuation report is not available, I think they have a practice of taking some depreciation value, some depreciation percentage, which they reduce it from the last updated valuation report, and they take that value as a for the purpose of provisioning. To that extent, it is okay, but you can't be sticking to the valuation report which you obtained 2 years back and say that I will continue with the same value, basically.
Okay, okay, fine, fine.
Yeah.
So, so it was so, but but I think in my opinion, we are taking distress value, not a realizable value.
So, Pinky, in many banks, there are different practices. I mean, some banks have a concept of taking a realizable value. Some bank have taken a concept of taking a distress value, and I will tell you the reason also. In past, in several of the RBI inspection, issue has come up as part of their RBI observation. So the RBI, wherever they have identified instances, let's say where the realizable value is only 5% lower than the market value, there the RBI has told them that you take a distress value. Now, the gap between a realizable value and a market value is normally 10%. And the gap between a distress value and the market value is approximately 20%. Now, in the cases where the gap is only 5%, the RBI told them that you take a distress value and not the realizable value. So, in specific banks, specific observations have been raised by RBI where they have moved to distress value. But there are banks which are still following a realizable value while arriving at an NP provision.
And one or more question: what the amount should be insured? For insurance, what amount we should take? What values we should take?
I think for insurance amount, what I understand from the insurance companies is the market value they insure because that is the value which they take normally as a base. Because whenever you are valuing, let's say this market value is relevant when you are sanctioning a loan or when you are giving a proposal on the loan. Now, at that point of time, the distress value is not the correct value to be considered because the distress value is nothing but a last sort of recovery kind of a thing that I will go and sell the property or I will go and sell the stock, then I will get this value. I think the insurance value should be on the market value and not on any realizable value or a distress value because those two values have a different, what you say,
Perspective, they have.
usefulness. It is not for an insurance perspective.
Yes, yes. Because in many cases they want to take insurance value lesser because of less premium they have to pay. That's why they are taking lesser value and they are making some excuses for that. No, ma'am, this face value or eligible value should be taken. In case of, I think in case of immovable property, they are taking advantage of this. They are
Hmm.
saying land
Hmm.
value, on land value, they are not taking insurance because in a valuation report, they are giving land value and building value. So
Hmm.
for
Hmm.
land
Hmm.
value, they are not taking insurance.
Okay. No, I think in my view, both all the full property should be insured. It is not only that you can just insured by only for the building, etc. It should be insured for the full property. I mean, that is how the insurance company looks at it. I'm not sure how the insurance company will look at it. Let's say tomorrow, if you have some issues with respect to the structure, how much they will reimburse. Because today, when I'm computing the LTV ratio, I'm not excluding the land value. I'm taking the entire value
Correct.
for computing the LTV ratio. So, I mean, considering similar thing on insurance value, you should consider the entire value of the property, because you are funding or you are giving a loan on the entire value of the property and not on building structure or a land structure per se. So, I mean, in my view, it should be the entire property.
Yes, in my view also it is, but in bank, in branches, I think many times we are arguing on that because they don't want to make it more.
I think somebody, Pinky, any other question?
No, it's okay. So we can now, if there
I
is
think
any question,
somebody is saying that please share the PPT in chat box. There are some slides which need to be toned down because some includes details related to some of the illustration, which I will remove from the slide, and then I will try to share it with the WIRC. So and that's why I'm saying I'll share this PPT later on with the WIRC.
okay, fine, Pankaj ji. So thank you for giving time, and I think you are very passionate about bank audit, which we can see with your presentation and your level of expertise and thinking. So thank you, and it was very interactive session. People are answering your questions and whatever you are asking, it is like you are in front of us. So, and with example, it is beneficial, because if you are saying like anything that we can't understand, but if you are giving with example, we can understand the things of how practically we have to deal in the bank audit, and it is more important nowadays, because I think when we are not giving any MOC, so bank, so in nature they are thinking that the bank, we at branches we are doing correct and there is no need of audit.
Correct. Yes,
So,
yes.
My request for all the participants and all the bank auditor, please don't compromise on anything. If MOC is required, you should give MOC. आप किसी की मत सुनो, चाहे वो कहीं RO से बोल रहा हो, इंस्पेक्शन वाला बोल रहा हो, and many times they are threatening us that you will not get any audit. If you are giving MOC, you will not get audit next year. But it is not correct. I am giving MOC every year and I am getting a bank audit. And I think Pankaj is also giving MOC when we were doing branch audit. And many of my colleagues also, they are giving MOC, and we had done many account NPA also in our audit.
No, of course. Yeah, Pinky, you are absolutely right.
So don't compromise with your quality and do bank audit as per RBI guideline, as per IRAC norm, and do the best from your audit. Thank you, Pankaj ji, again, and we will continue. We will continue disturb you. We will continue disturb you because in 10 days or in 12 days we have to complete our audit, and we need your expertise on this in some of the matters. So we will disturb you. So thank you all the participants for patient hearing, and do the best. Thank you for your bank audit.
Thank you. Bye. Take care. Thank you.